Good morning, friends. This is the first of the weekend videos. Now, in this video, I am going to discuss price failure, which means that is the opposite of the breakout trades that often people tend to take, particularly novices. Now, breakouts they fail 75 to 80% of the time because novices make the mistake of buying breakouts post a rally and they try to sell breakdowns post a decline. Breakouts succeed when you have a strong downside, like we got one at 11,950, and from there we saw a failure and a rally back to about 12 250 300. Similarly, the breakout above 12,300 that failed and the market quickly collapsed 60 to 70 points. So the idea is that the day trader or the short term trader, for him it's a key part of his arsenal that he should be able to understand where people are long and where they are short, and should be able to see on a price chart if the market starts to retreat at key levels. So these are opportunities that you get couple of times a day sometimes, but in a sideways market which is not seeking new levels, this is one of the key strategies where people should be able to make money. Now, what does a price failure look like? A price failure generally is a pin bar where you go beyond a resistance level, like you went beyond 12,300 and the price started to fail. Now, quickly you have to understand that the price is failing at a level and act accordingly. Price failure can also happen where a market makes a large green bar and then immediately there is a red bar which takes out the green bar at a resistance. Similarly, the price shows you that it's breaking down with a large red bar, but immediately buying is back and that big red bar has gotten cleaned out by a green bar. So all of your hammer patterns, shooting star, etc., if you start seeing these patterns form at important supports or resistances, you should be ready for the price to go on the other side. Now, what has happened before these events is also important. If you had a large decline before the price is beginning to move up, then there's a good chance that it's a breakout. Similarly, if you had a large rally and then there is a breakout which is trying to happen, uh, sometimes uh, that breakdown is likely to work. So it all depends on how many people are long and how many people are short. So post a large rally, you would expect most people to be long. Post a big decline, you would expect most people to be short. So you have to understand the structure of the market, and generally speaking, in a market like ours, which is range bound for months, you know, being able to trade price failure, and see, everything happens with a stop. So when I am selling at a resistance, when the price action is failing, I put my 15-point stop and either it works or it doesn't work. Generally, price failure, uh, charts, they tend to work immediately. Why? Because most people are long, and then their stops start to get hit. So the idea is that 80% of the time you are trying to trade a price failure. You are always looking on the other side. So my primary expectation is not the breakout. My primary expectation post a rally is to look for price failure and prices to come off. And similarly, after a big decline, my primary expectation is that the price at some point fails on one of the boundaries and starts to rally up. Google search price failure and markets, and you will find much more information here. Although in most books, breakout is something which is taught to novices, and they just show the ones that are successful. 80% of breakouts and breakdowns are unsuccessful. So this is something that the big guys take advantage of. Wherever you have those designated breakout breakdown levels, they are standing on the other side, and that is how trap trading happens. So long positions get trapped above key resistances, short positions get trapped below key supports. So the other day when we had that 100-point gap down, where uh, you know uh, Iran had fired missiles, etc., that was the day when you had to buy that gap down, because often these sort of event based large moves fail uh, on the side that they happen, and the market tends to go up. Now on Monday, which is 13th of January uh, 2020, because of Infosys results, chances are we gap up. So what am I looking for? Not for a breakout. I would look for a price failure. The bigger the resistance, the bigger the support, the better the chances of price failing to pierce through those levels sustainably. So I hope uh, you people work on these skills, because this is one of the primary tendencies of the market. The breakout happens once in a blue moon, but 9 times out of 10, it is the failure which happens. Keep stops, keep your capital safe, and if you are able to do it, 3 to 4 times a week, even in a bad range bound market, you will make lots of money. Keep yourself safe. Consult your financial advisor about the appropriateness of the strategy. And I hope to hear how well you have done with this. Take care, and see you again with another video over the weekend.